Hey everybody, and welcome to another true live scalping stream with the Mohawk Forex team. It rhymes so nicely. It's good to be back, and obviously we didn't trade Friday due to the news about our Queen passing away, so this is our first live stream since, and we'll be back again live streaming after the funeral on Monday next week, which is an official bank holiday now for the UK, God bless her. But today, big news is obviously CPI, inflation. This is coming up in 10 minutes time. The markets are saying 8.1, some are saying 8. The overall headline inflation news is going to be dropping, but they're still saying on the core inflation it's going to be up. And it's the core inflation which the Fed will look at and make the decision on how big a hike there's going to be. Obviously they're talking about low inflation, means there'll be a Fed pivot, and Fed will be cutting interest rates next year. Obviously at the moment the markets want to do that, but the core inflation, if it's higher than 6.1, obviously means there'll be a bigger rate increase from the Fed. And obviously this is a knock-on effect for Europe, for the DAX, for cable, everything. So it's going to be an interesting event and see if they get it right at 8.1 or whether it's lower. Now if it's below 8, that would be amazing. 7.9, 7.8 even, I don't know. You know, you just don't know. Could it be higher? We're going to see some high volatility, as we can see we've laid out here on the US 30. We're in our 5-minute time frame, RSI scanner, and our moving average cloud, and our trend bar, and that's it. And we've got our Fibonacci in there as well. But with these news events, is a kind of getting the direction right, getting in, getting some green and getting out, and then watching the market settle. And obviously as it's pre-market, the US 30 likes to trick everybody and go the opposite way. So we'll see, you know, if the news is better or worse than expected, and wait for the move. And even better is if we get a nice buy or sell signal to pop in, which is volatility based, which will also give us a helping hand in guessing the direction. We've hit this nice supply zone here, look, so price is the top of the fib looking to sell, trend buy selling, RSIs around the neutral. But again, we just don't know with the inflation. This could push US 30 higher. As you can see, we can scan out here, retest. It hasn't been this high for such a long time, so, but the markets have pulled back all this week. Again, is it a change? No, we're still in a bear market. This is just a bull run in a bear market, remember. So we're still under that 200 moving day average on the weekly, daily, whatever you want to look at. So we're still in an official bear market, so anything here is just temporarily, remember that. So we'll see. Like I say, we've got about 8-9 minutes to go. You can trade the NAS on this, you can trade the cable on this, you can trade the gold on this. I'm going with US 30 on my account, just using the smallest lot size one, which is 0.1 on IC markets. Just going to log into my broker now, which is of course, like I say, IC markets. And we're starting with well, we're at $1,000, we're just over $1,000, which is great. We started the week at about 600-700, so we've had some a good couple of days already, especially this morning as well, which is really good. We've made up for not trading on Friday. We started the account with about 600 last Tuesday, and we've grown that now, like I say, to about $1,200-$1,300. So we've doubled our account in a week, which is brilliant. We're just scalping the small lot sizes. We go in for 4 or 5 trades in one hit and 2 batches sometimes, depends on the movement. If we get a clean move, then we can go in again. If we don't, if it starts to range, then we'll leave it alone and wait for the open, because we've got the open coming up as well after. And after the open, we have the economic optimism for September news, which we might stick around for. We'll see. It all depends on this. 5 minutes to go. We'll just plug into Bloomberg as well, because obviously they're going to be covering this news result.
confusion as to where demand will ultimately emerge or trend to.
So cable for later. We haven't been trading this due to, obviously, like I say, the volatility and the way that the pound hasn't been moving. The stock market has been really slow in London because of obviously the Queen passing. But as you can see here, we've got a clean move away from our New York line, and we can measure that, and that is 16 pips at the moment. So if that pushes a bit high, you never know. So again, when it gets to our line here, we might be able to take a sell on cable, but again, we've got to wait for confirmation. There's your CPI on trading view. So again, you can trade this. I don't trade cable on news events because of the commission and spread. So you enter 4 or 5 trades, you've got to pay 4 or 5 lots of commissions. That means you've got to take a bigger move to pay that all back. You don't get that on indices. We just pay the spread. So US 30 is what we're looking at. I like the position on this. We're top of the Fibonacci. Everything's telling me we want to be selling, but we wait for that move. We wait for the RSI, get back into that neutral zone, and we wait for the result, because this could spike all the way up. Again, if we're looking for sells, obviously I'm looking at 236 fib level, and I kind of measure that from where we are now in this supply zone. 35 pips is perfect. We've actually preset our target at 30 pips per trade. Obviously I'll exit that quicker if I see it moving around. I'll just take some green and get out, but if I do hold it, then that's what I'm looking for, is a maximum of 30. Again, you don't want to overstay your welcome. Like I say, US 30 has a way of kind of going against the news, then with the news, then against the news, then back again, then trending. We know how this works. We've traded this multiple times over the last few years. We don't want to be caught out, and then we want to be clear and clean for when the New York Open arrives as well. Like I say, 236 is a good level to take profit. You see it's already pushing up, which some people will be tricked into buying now. And again, this could just drop. It's just crazy, just reading, following price action and being caught into a trap. You just don't want that. So you can zoom all the way out, look, and there's nothing there. So that means, you know, to me, I just want to get green and get out if it is a buy. And if it is, obviously we're in a buy signal. We're not going to get another buy signal, so it'll just push up and this will go green and then we're buying. But at the same time, if we get a sell signal, we're selling. But it's all down the result. And remember, go to the website www.mohawkforex.com if you want information on how to learn how to scalp like this, get access to our indicator system, and also have the mentorship. It's all on there. So it'd be nice to get a few more people true scalping. So we're just 1 minute away, 2 minutes away, just starting a countdown.
Daybreak Woodley. On Bloomberg Radio. Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green. On TV, radio, and the web.
Here we go. It's the countdown. Good luck, everybody. It's what I've been waiting for. This is my second biggest favourite trade after NFP at the moment. Like I say, they were saying earlier, CPI. No one took notice of it a year ago, and now it's the main event. Here we go, get ready. Let's watch that price action. We're loaded up. We've got the right lot size. Yep, double check everything, make sure. That's what we've always got to do. Make sure you're on the right thing. Make sure you're trading the right lot size. Here we go. Spiking. No move yet.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individual.
Look at that move down. It's a sell. Look at that pushing down. Wait for the counter.
Bipartisan support for this in Wyoming.
We want to make sure that people understand,
Woohoo. Gonna get in on that. Come on, let's see if we can. The broker will fill my positions. It's trying to fill my positions.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain.
Beautiful. Look at that. What a drop. Beautiful. $100, $200, $200. What a great result. Look at that. 8.3. Worse, higher than expected for inflation. So that's the drop. That's why. Amazing. Great results, everybody. Well done. That was an easy sell. Perfect. Now we've just got to catch the, let's catch, pull back on this. We've got the sell signal. Look at that, it's pulled so far away. I'm going to get some buys in on here.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure.
What do you think is happening in the blockchain industry right now?
I think in the long run, DeFi wins. DeFi wins.
Watch this pullback.
It's composable, it's transparent, it's cheaper.
Well, a drop. That was $250 in 30 seconds. I said it was meant to be $100. It ended up being $230. Amazing. What a drop. I hope you all caught that.
The CPI report in America just seconds away. Going into it, equity futures positive 0.75% on the S&P 500. Yields are lower by 6 or 7 basis points on a 10-year. The dollar is weaker, the euro stronger. Euro dollar 101.68. Waiting for that CPI report to come out. Standing by. Here's Mike McKee. Morning, Mike.
Mad, beautiful.
It's a little bit higher than anticipated.
Let's drop the market.
For the month of August in the headline number, which is more than the flat reading that we had last month and less than the 0.1 negative reading.
Now we're getting some buys in now.
Year-over-year rate to 8.3%. The forecast had been for 8.1%, so we're a little bit higher. We'll check into the details and see why that is. The core, which matters more to a lot of people, rises 0.6%. That is double last month and double what's expected.
Yep.
Pushes the year-over-year rate to 6.3%. From 5.9% last month. The expectation was for a 6.1%.
So you can listen to them.
So some bad news on inflation here, but does it really matter? Because everybody was kind of expecting the Fed to go 75 anyway. Quick look at what some of the increases come from.
I've caught some buys on the way back now.
Food at home, your grocery store.
There we go. Look at that. This is going to pull back. Look at the level it's going to go back to. This is amazing. See if we can get some more trades away. Remember, what goes up must come down, vice versa. Let's see how many positions we can fill. Oh, look at that pull up. Another 6 positions. And look, RSI is 10. You don't want to be selling now.
The wholesale price index had suggested, and then shelter,
we're pushing up.
The rent component that everybody's been concerned.
So we're looking about 30 pips or so.
Up 0.7% after a 0.5% move last month.
Just close some more positions out.
Shelter costs up 6.2%. So we are a long way.
Beautiful, beautiful.
Is conquered, and
all in best part of 3 minutes.
The Fed has still more work to do obviously cements a 75 basis point move.
More buys.
Mike McKeith doubling down on that going into next week. Mike McKeith,
Well, I hope you guys got some.
some might argue
I'm going to go in for one more lot, I think. Let's have a look. Just wait. Well, look at that spike. Look at that RSI 11. This is taking, as I'm clicking my positions, they're just going straight to TP. This is fucking amazing. Come on, push, 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 push.
Bang, slicing through 360, yields much higher at the front end of the curve.
This raises a question not for this meeting.
Fibonacci is redrawn, as you can see, look, because we're bottom of the fib. Ooh, just closed out some more. Come on, let's see if we can get another 5 or 6 positions. So anything with the broker just waiting for him to close positions out. There's a lag, and sometimes not all your orders get filled. Just the same as stocks.
Economic data, Tom, inflation prints to back off rate hikes. Then we just got disruption. That's a disrupting data point for this Federal Reserve to see month-over-month core pick up in the way it did again, Tom. It's going to change the conversation next week.
To scope and scale here, the real yield came just within 4 decimal points of 1% on the real yield here. Which
Beautiful. NAS the same. Cable. Look at that drop on cable. Everything was the same. Perfect. I told you this is bigger. Well, it's bigger now than NFP.
Huge shift. A huge
Look at that event.
disappointment. What was the landing that we had earlier this morning?
Soft.
Soft. That's what we were very soft.
I don't think anyone's talking about that right now. What you've heard from Fed Chair Jay Powell, from Vice Chair Lel Brainerd, from Mr. Waller, the Governor over at the Federal Reserve, what we've also heard from Jim Bullard repeatedly, what are they going to say? This is exactly what we're talking about.
This is not about Fed officials. This is about
Good cable. Look at that. Look at the dollar. Ooh, strong dollar. Index is down. So I'm just going to wait now and see if we get a pull. Wait for this RSI to click. We're going to wait for RSI to pop back in our zone. Yeah, so we're just waiting. And we're going to load in some more. What goes up must come down. What goes down must come up. This is great. This is proper true scalping. No messing around. And basically we took, wow, so many positions on that. I'm just going to...
Well, I think, you know,
and that was all the reverse as well. So was it even the initial trades I took?
75. They're definitely going 75. And then, you know, Lisa, I think you had a very good comment there as well. What does this mean about November? I mean, we thought they would be stepping it back to November, to 50 in November. And at this point, you would say 75 is certainly going to be on the table there in November.
Jay, how do you take this data, this financialization shock over...
And that's how you do it. True scalping team. You know what I mean? It's... If you can get the hang of the fundamentals, you've got the tools set up like this, this is what you can achieve.
I think what you're looking at here is there's two things that's going on with the inflation, right? One is that inflation is going to continue to eat into nominal income. And so what we've seen, if you're looking at real disposable income year over year, at least in July, it was down 3.7%. And so you can't continue to have consumer spending grow if real income is contracting like that. So that's the first problem with inflation. The second problem is it puts the Fed
US 30 again, RSI 10. Tempted to put some more buys in.
We're talking 75, 75, 75 as far as the eye can see. They're going to make that policy mistake and then potentially put the economy into recession, which is what we think is going to happen.
See if we can get more, 5 more positions away.
Jay, why did almost all forecasters get this wrong?
Well, there's a bunch of volatility on a month-by-month sort of basis here. We were above consensus, but we weren't at 0.6. I think that the big thing here that's really...
They got it wrong again, and that's brilliant for us, and this is why the market moves. So again, they predicted 8 to 8.1, it was 8.3, so inflation in fact has popped back, not dropped. So obviously that's what's dropped the markets. Inflation rate call was also up, so this now means that the Fed will probably hike 0.75. This needs to be under, it needs to be a 7 really for them to consider not hiking that high. So this is, like I say, it's quite misleading because it's not a better than expected result. High inflation is not good news, you know what I mean? But this is just the mathematically, it means the result is better than what they predicted, 8.1, 8.3. This is how you've got to be careful of any of these kind of things, you know. It's better than expected result, but the news is not. The news is bad, hence the market's dropping. But the dollar getting stronger. Times are hard, dollar gets stronger, and this is what we get. We get a drop right down to $1.15 on cable. Amazing. I think we're just taking some more profit. Yeah, while I was talking, we just took some more trades there. What do we get there? Another 3. Another $30 or so. Don't usually trade this many, but obviously with this event moving as it has, this has been a good one to jump into. So dollar's still pushing, pound down, look, now on 115. So the good thing is on our cable trade, guess what we're going to be doing? We're going to be looking to take in buys. I mean, you've got to be ready now for these buys, because it will get back to that 116, 117. We're just going to wait for RSI to get back to that neutral zone, sit on our hands time. The cable trade is in the bag. We're just going to wait for the confirmation on that.
What does this say, Jay, about the inertial force of supposed disinflation? I think we're talking about getting to 5 or 4% inflation out there.
So we've smashed our, I mean, we're like 20% on the account, so it's crazy today. Just really, really happy with that. I knew it would move, but I didn't know it would move this well. So pound, dollar and US 30 have been the stars on this one. You can see your bottom of the Fibonacci, your bottom in the oversold zone. Do you want to be taking more sales? Hey, that's not my advice, but with the same position on both. RSI is 9. Look at that, beautiful. And look where we can go. We're sat on decent support level now. This could still break lower. It's been a shock to the market, but we're watching price action.
People start to pull forward their expenditures, which pushes up inflation. They ask for higher and higher wage increases as well. Fortunately, we haven't seen it become unmoored, but if you continue to see prints like this, then you do start to worry about that happening.
Yep.
For all of you on Bloomberg Radio, Bloomberg Television, Dr. Jay Bryson with us with Wells Fargo here. A stunning inflation report. John, is that the right word? Stunning.
Cool, we're just going to set our levels for a bit higher for take profit as we had on 10 pips.
John, help me out here. 2.5% flip-flop in what we see on S&P
on the Nasdaq 100.
Yeah, and some.
We're down 2.4%.
Yeah.
This disrupts the idea that this Fed can back away anytime soon, Tom. It's a bit of reality.
Well, I'll go with the disruption, or just to say that we got.
So we just got another
whole new dialogue. We do that
few trades there, another few, 42, 42. So we got another $50 odd there on the buy. You can see, look, we've got a green candle now. RSI is kicking up, so I'm just going to keep loading.
Services are up 6.1% over
10 pips a time.
So we are seeing service prices start to rise, and you can see it in a number of areas. Interestingly, education, tuition, college tuition, it's time for kids to go back to school, and that was up 0.5%, a fairly strong increase for that category. So yeah, you would know something about that.
Let's watch this push up.
We're also seeing motor vehicle insurance up 1.3%. That's been an ongoing issue. And airline fares fell 4.6%, but they had fallen 7.8% the month before. So we're losing a little of the benefit from that. So you are seeing services rise. There was one thing I did want to mention. Somebody asked me this morning if we could mention this because it matters to senior citizens. The Consumer Price Index for urban wage earners was up 8.7%. We'll have to see what the average numbers come out to be once September's numbers come in, but that will lead into the Social Security COLA. And if you're looking at an 8.7% increase, that's going to be pretty big.
From London.
Still pushing down, so I'll just wait again. Wait on, let's see RSI get back into this zone here, and then that's a good time to put some buys in. We'll just hang, wait, and same with cable.
It's much hotter than anticipated, and you can see how the market's reacting to all of this. Equities negative, really rolling over, and yields really punching higher at the front end. The 2-year, Lisa, back through 360. When was the last time we could say that?
It's been a while. It's been close to the highs that we've seen this year, and those would be the highest levels going back 2007. Yeah, 2007. More than a decade. More than wow.
Is this data dependent?
I know exactly.
Are we living data dependency?
Can I just say yes? But just one more thing. I was doing some reading, and of the reaction that people were saying, and the number of people saying the likelihood of 25 basis point rate hikes, just like we were hearing from Jay Bryson, is growing in November, not just September, in November. So all of a sudden you start seeing that get priced into the Fed funds futures. That's a new level.
You're asking the right question. It's not about next week. It's about what happens after that time.
Yeah, it does. And of course, some of that comes back to economic growth, and it comes back to the tea leaves all of us in economics, finance, and investment glean from the short-term bond market. We're going to do that right now. Ira Jersey joins us, Chief U.S.
This is Mark, and this is a car, a sofa, a bag. But since Mark has been trading with Capital.com, he started seeing things a little differently. He sees a
U.S. interest rate strategist for Bloomberg Intelligence. Ira, what should we watch?
Waiting, we've got another push coming. Again, redrawn our fibs. What happens when levels get breaking? The automatic fib steps in, redraws it, so you haven't got to panic about that. Let's see if we can push up. Hit that 786. That should be enough for us.
The fact is that we had
RSI is 9. Market's still in shock about this. Just have some coffee.
Interest rates. The question still is, how high do they go, and then how long do they hold them there? And I think, a lot of the data from this report, and it's always just one report, but when you get one report again and again and again, that tends to look at things like core service prices continuing to grow as quickly as they are. Then the Federal Reserve has to worry that inflation is going to stay well above their 2% target for a long time. In fact, I think, and some investors that I've been talking to are questioning whether or not they
market trying to push. Look,
2% target as their
786 will do us.
Be at 2.5% or 3%, or have some range between.
Yay! Here we go. We just cleared some more trades. Fantastic. That was another.
It's very likely that inflation is going to stay.
Do we get there? Another 1, 2, 3, 4, 5 positions, and that was another 10, 20, 30, 40, another $50. It's piling up nicely today. I love this kind of scalping. This is what I really enjoy doing. And we're not even got a proper buy yet. We've not even got a proper buy yet, and we're taking the buys and scalping. If we can get above the 786, we're going to 618 golden zone, as we all know. It's a case of waiting, staying tight on that. RSI, if it gets into that neutral. Cable, exactly the same, but you don't want to be trading cable on this. You want to wait for the bigger move later on. It's really this. This is such a beautiful drop. We've still got a buy signal to drop in as well. There's so many chances to get in on this. You don't have to be as aggressive as me. We can wait for green RSI, we can wait for a green buy signal, we can wait for a green trend bar. There's just good possibilities. And we've got to take advantage of this. These moves other people are scared to take, they're missing out.
It goes back to this persistent thing. How much longer is inflation going to remain at these kind of levels? Ira, can you talk to me about this move we're seeing in the 2-year? You picked up on it, let's discuss it. We're basically at 370 now on a 2-year yield. We're not far away from it. Ira, how much upside do you think there actually might be?
Core consumer prices is what it's all about. That's what's caused.
Our year-end target is 390, and that's predicated on the idea that the Fed's going to
at core level predicted only to be the same. 0.3 rose to 0.6, and that's what's killed the market. That's what's dropped it.
I think 2-year yields are going to certainly be much more
month on month was out.
To what the Federal Reserve is doing.
Basically, all it was out. It was just out. So just another. That's why I love trading fundamentals, because at the moment they just cannot get anything right. The closest result we got was probably NFP, a couple of weeks ago, but that was the closest I've seen these expert analysts, so-called, get within shooting range of the actual result. And again, with this one, it's just proven they haven't got a clue.
What will you listen for from the Fed? How do they change
And we take advantage of it, because that's why they moves the market. If they got it right every single time, the markets everything gets priced in, and things, you know, we've seen it with certain news events, just nothing happens, or you get caught in a bear trap or bull trap, you get caught in the wrong direction. With this, the market cannot manipulate, you know what I mean? With that result, you know, there's nothing anyone could do. You just have to go with the news. And like I say, be careful, just because it says better than expected, it's not. It's higher inflation.
And keep going to, you know, 5, 6, 7%, and then you have another group of investors that's saying the Fed can't go much.
Now on the open, we could see this nice push back up. So we've got 40 minutes, so we never know. We could see a beautiful, nice back to our level here. Look, this is where I'll be looking for your zone here, where everyone's looking to take buys. From here, we're going up. The price has got to get back there first.
These 10, 15, 20 basis point moves on a pretty regular basis as the sentiment shifts so significantly.
Ira Jersey, Bloomberg Intelligence. Ira, thank you. I think some people might argue going into that Fed meeting next week that the chairman should just take the speech from Jackson Hole, Wyoming, bring it out, just read it again. I mean, this is it, isn't it?
You know, we're living this, and I think we're hugely biased in New York, John, and maybe biased in London as well. No, but I mean, in New York, we're living this rental, buying, selling reality.
A lot of the country.
How do you substitute that? If I like Budweiser and it goes up, I can substitute to Miller champagne of bottled beers. How do you substitute your rent?
I take it a step further. Lisa brought this up. I remember, was it a month, 2 months ago? You brought up the mortgage costs.
Yeah.
It's really expensive to buy, right?
Exactly.
So a lot of people are left with no option other to rent.
Well, right. This is sort of counterintuitive, because if you get higher costs to buy, you would think that would tighten the labor market or tighten the housing market, and then that would reduce housing costs, right? But in fact, it increases the cost of renting, and you're seeing that across the board.
It is a different week here in London. We've had a pause today in the services for Queen Elizabeth, and it's allowed us to actually catch up with members of our wonderful London team. One of them, who you've heard often in America on Bloomberg Radio, Bloomberg Television, is Marcus Ashworth. To say he writes for Bloomberg Opinion barely describes his market excellence with service at Barclays over the years, and 14 other institutions that you and I have forgotten about have been merged into oblivion. Marcus, wonderful to catch up with you today. What does this stunning report mean for Governor Bailey, who the day after the Fed meeting has to adapt and adjust to the central banker in the inflation of the world?
When I saw this report, the first thing I thought was ouch for America, but double ouch to the rest of the world. But, you know, the dollar is just is killing everything, and it's now killing it even more. And, you know, 2-year yields up where they are, which to my mind, it's one number.
Yeah, look at the dollar now. Look at that, 115.
No one can measure inflation properly. Some central banks
8, still dropping.
Up to that fact.
So hold off on your buys. USC the same, still dropping. Let's see if it hits this bottom of the fib. We're going to curl up, and then we'll be in for the buys. We're going to buy at the lowest point possible, remember?
Yeah, it's a reality check when, you know, Powell had given that to us at Jackson Hole. Now's the data proving it. And that's awful for the UK. It's even more awful for Europe, and let alone emerging markets. It's a disaster. It's a very bad print. Well, because the US are going to overdo it, and they're going to break something. And what they're going to break is the rest of the world.
Well, let's talk about it. Let's talk about the bank around the corner on Threadneedle Street, Bank of England. Tom raised the question. Are we at that point now when we can just call it what it looks like it is, which is a little bit of a war? It's like the reverse of the FX war we had maybe 10 years ago. Is that what we have?
The only good thing about the UK is that they're making the most stupid mistake ever trying to fiscally tighten under Rishi Sunak. That's gone away. This new government is going to unwind everything he did in the last sort of a year or so. Post-furlough, we're going to get a very big fiscal stimulus, which is what's needed. We should have never had the tightening to start off with. So that's the only good thing going, I think, for the UK in that sense. Sterling's already really cheap. In that sense, yes, they can hike. I don't think they need to hike quite so much than perhaps other central banks do, because the consumer hit a brick wall in February in this country, and I think therefore we've got quantitative tightening, which is the first one to be active. That probably comes this month or next month. That's going to be quite a big.
John, I noted Lisa, but 115.83 on sterling is a wow shift.
It's not 114, and that's the good news because it was threatening to break through 114.
Yeah, we're 2/3 of the way there.
Where we are right now in this bond market, Bramo, is where
there you go, and we are. Look at that, it's dropping even more. We're 115.6 now on cable.
Who said we've seen the highs of the year. I wonder if they have to rethink that because the highs of the year on a 10-year are about 10.
We've got a buy zone here. Look, from previous support, smashed through that. So at the moment, all bets are off. We just got to wait, sit on our hands. I wouldn't be entering sells now. You know, that's just the way it is. It might go down lower, but you know, we can see where we are. US 30 exactly the same. We're not taking any buys yet. We're just sitting on our hands waiting. We're bottom of the fib.
Whether it is probably going to be viewed as a mistake, or you're going to see a reversion to rate cuts more quickly in Europe, in the United Kingdom, because there is not the strength to back it up, and the weakness will become more pronounced more quickly.
Well, I mean, the pain in the UK is, as I said, somewhat softened by this big fiscal package which is coming. In Europe, I really worry because you know we've got so much problems coming through on the
We're just going to wait.
And the European Central Bank.
We're nowhere near taking proper buys yet, so.
To exactly to keep up with the Fed. And that's the problem. I think the rest of the world is going to be broken. At some point, that will feed through to the US economy, and they might stop hiking.
We're out of time, 30 seconds. Credit Suisse, you're expert. What if they breach €5, 5 whatever per share? What are the ramifications?
Well, I think Credit Suisse is just what it's good at. It's private wealth management and one or two other things. I think they have to go back to core, get rid of the risk culture. But you know, intrinsically, it's a decent bank, and I don't think it'll be bought out. So there's no M&A premium, unfortunately.
Swiss francs, TK.
I can't.
What a move though, amazing drop that was. I hope some of you guys caught some pips on that.
Think about what they've got to do. The SMB, the Bank of England, we've all discussed it, haven't we? The ECB's got 75, the Fed's about to go 75, looks now gone now, into next week, day after, Bank of England. They've got to do the same thing.
It's the summer of 75, isn't that what the group said? I think,
the summer of 75. I missed that.
Yeah.
I see that.
Yeah.
Is that Hollenhorst?
Yeah, I think so.
I wasn't listening to it. Was that this morning?
No, it wasn't this morning. It was a note. No, it was not this morning. It was a couple of weeks ago in a note. And he said, this is summer of 75, and I think that's about right.
Jennifer O'Neill was in that movie.
Oh, really?
She was.
Okay.
Summer of 75.
I'm going to whip through the price action.
Just to the market.
Let's get there. Inflation came in 25 minutes ago, hotter than anticipated. Month-over-month core is where this market was focused. Month-over-month core came in with a big upside surprise. That means equities lower. We're down 2% on the S&P 500
We continue to deteriorate.
Euro dollar, big turnaround, negative 0.75%. That's a weaker euro, much stronger dollar. Talked a lot about the moves across the bond curve. 2's out to 10, 10's up by 6 or 7 basis points, 342. Where's your 2-year now?
It's 170.
370.
370.
Exactly.
Like 170 because you've got.
Well, I mean, I got very comfortable with the one handle for a long time.
Right.
Then 2, and now it seems 3 is the place to be. 370. And Ira Jersey of Bloomberg was talking up 390.
Yeah, it's beyond 370. Well, if you think about a base case that markets are pricing in, that you're going to see a 4% Fed funds rate, and they're going to hold it there for a longer period of time, well, it makes a lot of sense.
John, 700 Dow points, most of that in the last 20 minutes. Where are we at 3 p.m., 4 p.m. today?
Seriously.
1,000 points.
So we're going to ask Krishna Mamani of Lafayette College. He's going to
What a reset.
Alongside Esty Dweck.
Yeah, are we going to go lower? Who knows? And you can see here we've got a zone which we'll set up as a supply. Bang, there we go. That's our next area to look out for price drops.
NASDAQ you mentioned earlier.
Yeah.
NASDAQ is huge.
Big move lower in this equity market. We'll break it all down for you in just a moment. Upside surprise on CPI in America. That means a big downward move on this.
This is Galileo FX, the best rated trading robot of 2022.
Equity market, the countdown to the open, just around a corner, with 35 minutes away. This is Bloomberg.
35 minutes. Let's see. We might not be doing any trades till then, but like I say, we've had a good. That was a good bag full of pips. Some nice wins on there. Took no red. It's amazing, amazing. Now we're just going to wait. I just want to put some buys in. I mean, the market might just pull back to the golden zone, 0.5. Look, you can see here. If it bounces off this demand zone here, let's wait and see. the signals were spot on. As soon as I saw that sell signal flash, bang, we were in. You know. Like I say, when these signals come on your chart in conjunction with an open or a big news event, they're pretty much 90% bang on. When they're outside in a ranging market like this, look, you get fake outs, but again, you can use RSI and look, avoid the fake out, sell signal trend, but it's green, so you don't take the trade. It's buy here, look, that's a nice one, that was a nice cheeky little buy. You know what I mean? There's ways to avoid the fake outs on them. But the best place to use them is when we see them on opens and big news events. As you can see, look, it came in, bang, straight away. And you can set alerts for it. 1 bar per close if you want it to be full, but on this one, you could have just gone 1 per bar. And as soon as it alerted you, you could have been in, because even if you entered the bottom of the candle, you were still, even if you missed all that, you're still 245 pips. What a drop. Amazing, amazing moves. The market just keeps delivering for us. This is great. And now we're just looking, we know what we're looking for. We're looking for a tasty little pullback.
One space agency that travels under the radar is ESA, which is surprising considering what European
cable, exactly. So I want cable to sit there because we want to be in on these buys. Once we get to 30 minutes after the open, I want to be taking these buys. You know, it'd be nice if it gets back to that 117, but it could be lower. It could be lower. You know, we could be right back down. Here's the next level of set. We're talking here. We're talking 115.20, and then we're talking big buy zone here. Look at 114.60. So these are the levels to keep an eye on. If price does deteriorate and go lower, the dollar gets stronger. The fib's great when you get that first pullback candle. Then the fib works, because obviously then you're in pullback mode, you're looking for the retest of certain levels. But remember, when it's at the bottom of the fib, it can still stretch and stretch and stretch. So look, I think it is now, look, it's pulling. It doesn't mean it's not a heavy support. So you've got to watch out for that. The fibs are great once price is already moving up to 236, retested, then pulled back. Then you've got an idea of how accurate the fib is. But for what we're doing at the moment, the fib means nothing basically. It's just giving us a guide of where, when we do get a move. But at the moment, you can see it's stretching out. Price is still dropping. This is our support level here at $1.15221 area. But RSI is 8, 9, look, still trend bars bearish, so we're not doing anything at the moment, and US 30 will be exactly the same, hitting support.
You need top analysts to bring you exclusive global insight into cross-asset markets.
Bitcoin ain't playing along today. It's going to be short term.
Bloomberg Markets, The Close, weekdays on Bloomberg. This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from London for our audience worldwide, counting you down to the opening bell. Good afternoon from London. Good morning to your stateside, waiting for that cash open with equity futures dramatically lower, down by 2% on the S&P 500, negative by 2.9 on the Nasdaq. TK off the back of a much hotter than expected CPI report in America.
With global ramifications, there's no question about it. Let's go to the States. We're going to go to Anne-Marie Horton and what the White House response to this will be here in the half hour. But John, I really want to emphasize how many people got this wrong in one lone voice at Jackson Hole nailed it.
Chairman Powell himself, we've got work to do, and everybody else has followed him on that Federal Reserve. This market, though, some participants, Lisa, ignoring that Fed communication, waiting for that soft landing. Some of the data recently spoke to that. This data point did not.
No, and that's the reason why I find it fascinating. The knee-jerk reaction in markets is as dramatic as it is. People really have believed that the Fed had it wrong and that they were right, and that there was just a disinflationary tilt, and you were going to see inflation slow much more than it actually has. This raises a lot of questions about what's in assumptions and how much further this sell-off has to go.
To Tom's point, it will be very interesting to see how the White House responds to this.
Yes.
Because the month-over-month numbers have come in much hotter than anticipated. We talked about the front page of the newspaper going with the headline numbers.
Here's the rejection look off that support. This is more like it.
Even within month-over-month core, you need to go deeper. Doesn't speak to a story that's fading anytime soon.
No, it came in double where people had expected it to. If you look at month-to-month core inflation, and when it comes to the White House's response, this comes at a difficult time when President Biden is now about to campaign on the fact that they're getting inflation under control, and people are less worried about inflation. He's pointing to gasoline prices. This flies in the face of that narrative.
I wonder if he's rewriting some of those speeches.
Think it's him?
Well, whoever's writing those speeches.
Exactly.
This is often the case.
Yeah,
of
always.
any administration, it's
Exactly.
usually someone else. Equity's down, yields up, it's 2s out to 10s, your 10-year yield is much higher, your 2-year.
Well,
You're now got to get used to 370 on a 2-year, Tom. Can you get used to 370 on a 2-year?
no, I cannot. And moments ago, a massive moment for these markets in the years that we've been doing this, the 10-year real yield at 1.00%. It is, John, the signal of that. For those of you that aren't on Global Wall Street, John, explain why 1.00 the real yield, why that's important.
Toxic for risk assets, and those kind of levels remind me of where we were in late 2018, where the equity market, let's face it, collapsed. Some people might not like that word, and yields, spreads on credit, Lisa, they were much, much wider than where they are now.
For years, there was no alternative. Now there is an alternative because you're actually getting yields and income from some of these instruments, and that, I think, is the big takeaway from real yields climbing.
Mike McKee is going to join us now to break down some of this economic data. Mike, this wasn't the number many people were looking for.
No, some people were thinking that way on Wall Street, but let's go through some of the numbers that are making you three so gloomy this morning. The month-over-month CPI comes in at 0.1%, which is higher than the negative 0.1% that had been expected. So we see the headline fall to 8.3% from 8.5%. But the core is the one you're talking about, was up 0.6%. Last month was 0.3. The forecast was 0.3. So we see the core rate rise to 6.3% from 5.9%. I'm guessing Joe Biden will not be talking about the core rate this afternoon. What moved in the indexes? Well, you can see there gasoline kept its part of the bargain. It fell 10.6%. We knew that that had gone down quite a bit. Yeah. But food has not reversed. People were thinking when the commodities started to fall.
Inflation shock news, and that's why we're still not seeing any buys yet. We're still hanging on. RSI still rooted. Look at that 7. I mean, it's just so oversold. It's just we're running out of strength. But remember, we might have enough more drops on the open, or as I think it will be, it's manipulation and buys. We can get the buys then to 236, which I won't mind. 1,000 points. Look at that. Whew, we've got some serious. I'm actually going to raise my T because I've got kind of like 500
in the futures markets, and people are pricing in 75
on my
for the September meeting and a possibility of
changing that
for the November meeting. You can see here that the Fed in the past has always raised interest rates above the level of CPI, both CPI and core, and you can see all the way over on the left, on the right there, they're a long way from that. So we need inflation to come down, or we need the Fed rate to go up before you're probably going to see.
I'm going to change the TP to 550 points, 500 points, 50 pips per trade entry this time, in case we get some real big spike on the open that, you know, will give me a decent amount of profit rather than me clicking it and not getting stopped out by the broker. So just clicking through now.
When is the when of getting to neutral?
Generally, the feeling has been they want to be there by the end of the year, and that gives them 2 more meetings.
This is a great feature on IC markets. Actually, you can set a preset, so you get spikes, and they'll take you out, take your trade out in profit.
Raising rates over the next couple of meetings. Tom, I can also point out that you probably helped because obviously supply not keeping up with demand with those beverages of your choice. Alcoholic beverages up 9/10 during the month of August.
I can tell you that's a true story. Mike McKee, thank you. As I sit there with a pot of tea and Tom's on martini number 4, as is often the case around dinner, not breakfast. That's impressive.
Thank you.
It's around dinner and not breakfast. Chris Mamani's with us of Lafayette College, the CIO. Krishna, you've got to respond to this one for us. Equities down and down hard. I think I've got the S&P off 2%. Granted, over the last 4 days, we were up about 5%. But your thoughts on what we got 35 minutes ago?
Well, so I think Jay Powell basically laid it out from a policy standpoint. And if you focus on that, nothing has really changed that much in that, you know, inflation is high and they will continue to tighten. And if you are looking for a pivot, you know, last few days and probably last few weeks, you turbocharge your expectations and you'll probably be giving all of that back. The bottom line is the Fed is looking to get it to 4% or higher. And they will get there either this year or early next year. The real question for the market is, one, how long do they stay at that terminal rate, north of 4%? And will they pivot because of
Ooh, okay, Nasdaq plunges 2%. Wow.
Looking at this month's number,
We can see it there, look at that.
with the last month's number.
So you can trade the NAS exactly the same way as US 30 if you want.
Last month, and this month
We just got to wait.
projected too much. There's probably not too much of a reason for us to be that pessimistic. Inflation is slowing down, but not at the pace that the Fed is comfortable with, and that's what the markets have to deal with.
So what's your sense of when it is a good time to go into debt, to go into duration, to start saying we have seen the
US 30 still just ranging away, still well away from where we need it to be a confirmed buy.
under control? Do you get more of a sense of that now with the CPI print?
Well, no, so I would say that both the treasury markets and the credit markets are probably a lot more vulnerable.
Markets have just completely stalled now. Look, stalled in the support zone. You can see there's a green. So there's people waiting for buys. We've just got 20 minutes left. Let's see what we can get. Our final trades of the day. We've had a great day. Like I said, we're 22% up on the account. With London open and then this inflation news, so we don't really need to trade anymore, but we're just going to do the open, grab a few more pips, and then we're done for the day.
Get into a recession, it probably may not be such a bad bet.
And let's have a quick look at the news for tomorrow. Or tonight, yes, we've got the oil, so we'll be trading this. Have a look at the API, and in the dead zone in between the end of New York closing and Australia opening, so we'll trade that. And tomorrow is the turn of the UK inflation. This is pre-open as well, so this will impact the open on London, so we'll trade this one. 10.2, so expected to be higher inflation again. Let's hope not. That means the Bank of England will put interest rates up, as we know. And then we've got PPI, personal spending, producer price. So this always follows the CPI, commodities, so we will be watching this one tomorrow and trading this again same time, pre-New York open. And then we've got the gas and oil news as well. Thursday we've got retail sales, and we've got our good old continuing job losses, our usual weekly scalp on the continuing jobless claims numbers. And then Friday, to end the week off, we have retail sales for the UK, which again, we don't trade that, we'll just see if how it affects on the open. And one of our favourites, probably the third biggest, you've got NFP, you've got CPI, and now you've got Michigan consumer sentiment on Friday, the final trade of the week. And it's a good one because it's predicted to be 60, which is really bullish. So it's going to be interesting to see what that comes out with. So some good news events. If you trade nothing else, you could just trade these news events if you know what you're doing. Practice.
Hey, Krishna, that's what we all want.
We are getting closer to that.
We're getting closer, Krishna. I've got to ask you this. We're getting closer to the Fed next week. Everyone's going to say 75. I get that. Can you tell me what you think the forecasts are going to look like next week? Because we
RSI still 7, rooted to the bottom. Still well away from where we need to be taking any buys.
They perhaps have been a bit more optimistic than they should have been, and a lot of commentators have kind of chided them for that, and I think that would probably still be true. The real question is, what do they do over the next few meetings, and how quickly do they get to the terminal rate that they are striving for? And I think if today's data is any indication, they would probably hurry it up, because right now the economy is in a good enough shape where they can take that risk, and the economy can take that punishment. So my expectation would be that rate increase expectations have to be brought forward. That's what the Fed wants to do. They want to get to the terminal rate as fast as they possibly can, and then hopefully hold them. Whether they
could be looking at 31730. You never know.
Thank you, Christian Mamani there of Lafayette College. Off the back of this hotter than expected CPI report and going
It's
into
down
the
here,
Reserve next
touching.
week, got to squeeze this in because someone's asking me.
I know.
Quiet period, no Fed speak.
No Fed speak. That's the reason why.
Do you think they might?
We might get something from one particular reporter at the Wall Street Journal to basically say.
Not saying,
but honestly, what are they going to say that they haven't already said?
I hear you.
I mean, they have been very deliberate and they have been very vocal and united in saying we're going to hike rates.
And people have chosen to ignore them.
Right.
Now, Tom, in the summary of economic projections that we get next week, are you expecting to see inflation adjusted higher, growth lower, dots out there up by 4 and for a whole lot
longer? They will manage the message and it'll all be vector-based, and they'll do it with gradual approach, which they do. I want to look at the right now, which is under no circumstances, John, here now, 1 hour after this volley, 45 minutes after this volley, have we seen a bid. We've got Dow 800 points. We're going to get a Dow negative 1,000. Here we're going to get a VIX out 2 big figures. The SPX, of course, is what institutional Wall Street's looking at. These are markets on the move this afternoon.
The S&P 500 down by more than 2%. The Nasdaq 100 down by 2.9%. Going into the opening bell, 17 minutes away. Just a moment, we'll catch up with Flowbank's CIO, Esti Dweck, on some of the price action.
Crazy, look at that.
The AMH down in DC, and what the White House might have to say about this. This is Bloomberg.
Rolls the markets. We've been roiled, look at that. And still RSI 6, still no buys, it's just crazy. It's the whole thing, even true scalping, sometimes you just got to wait. You just got to wait. We've had such a massive drop, it's unbelievable. What a drop. They're saying it's going to drop more, but I want it to be a long position from here to there. Stop loss is going to have to be below. So look at that, 2,000 points. I mean, 200 pips back to that 236. Amazing. You've got to sit and wait for this. This is just a rare opportunity to get in. RSI 8, green candle. Is it going to stay green? We just need a little move. Look at that, for 100, for 10 pips, nothing. The move is slight.
I went back and looked, and very few secretaries of state in the last 100 years, or maybe ever, have really gone back into government. So why did you want to come back?
Be nice to see a buy signal, but it's going to be a way. Look at the volatility. Look how low we are.
2 daughters. You've got wonderful family. Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple. We're not in a good track right now. The world is not serious enough about reducing our emissions fast enough, David. And the result is that the planet is going to continue to evolve in reaction to what we human beings are doing to it, mostly through fossil fuels. Most of the emissions that are going up nowadays into the atmosphere and are creating this increased level of energy that comes from the ocean, goes into the storms, the floods, the rain, all of it is explainable, and it's all linked to the changes we are creating on the planet. So it's very simple. I wanted to come in because I think we have a real chance now to make something happen, and I think Glasgow was a major step forward in the effort to do that.
No signs of a reversal yet, team, so we're still hanging tight. Want to avoid any kind of drawdown if possible.
Politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
There's plenty of room for this to move back. Like I say, sort of 31955 level.
Democrats mobilize specifically younger voters.
Bringing you the political news you need to know.
The president has made it very clear that this is
So yeah, which we're talking about the 236. Basically, the 236 fib level is where we're looking at. For potential TP, where we get the buy signal. You don't have to do this. Like I say, you can set the alert up on your phone and just go about your daily business until you get that signal.
BSO season sponsor, Bank of America.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by the flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Hey, I popped a little few buys in on that just while we're talking. That green candle, I'm back out again. That was that was $30 there. Just a quick little micro scalp.
We are 13 minutes away from the opening bell in New York City, and equities are down and down hard. Negative 2.35% on the S&P 500, on the Nasdaq 100.
Risky buys, but I saw the move and went for it.
Percentage points after a hotter than expected inflation report in America. Joining us from Washington now, Bloomberg's Anne-Marie. AMH, let's talk about it. How is the president going to respond to this one?
Well, it's kind of an awkward moment because at 3 p.m. later today, he's going to be gathered with members of Congress, his cabinet.
RSI, so going to get back into that zone.
Talk about this historic legislation, the Inflation Reduction Act, which is massive legislation. They decided to call it Inflation Reduction Act for a reason. They knew this was going into the midterm elections, going to be one
We're
of
back into that moving average cloud. Look at that.
Of course, has money going towards climate change, a 15% corporate minimum tax to make over $1 billion to the corporation, and lowering the cost of Medicare. But how much is the president going to be able to stick that message with the fact that...
Yay, we're in again. We've got in again there. And we got another $40 on that. Quick. We slipped in there. Yeah, we've got 7, 13, 20, yeah, $30, $40 there. Just posting the results in the group, you can see.
But obviously, just less than 2 months away from the midterm elections, Republicans are really going to harp on this.
Emery, which party is advantaged by sustained inflation?
That would be the Republicans going into the midterm elections, right? Because they're the ones that can say, look, inflation is not coming down. It was not transitory. Something that this White House, something that the Treasury down the
Get ready. It's going to be some big moves.
So it's the Republicans that want to make sure that this message is top of mind of voters, of consumers. Higher
good luck, everyone.
Higher electricity bills. If you look at the inflation report, yeah, gasoline is coming down, but natural gas and electricity is higher. Higher rents. All of this is being eclipsed if you're not getting the wage gains, and that's their biggest problem. But the one thing the Democrats
just pulling back nicely. Is it going to spike up? Are we going to get a manipulative spike up before we take a drop? Is it going to drop before it pulls up? Oh, that's what I love about it. We're just going to be in and out, take the green as I did there. Oh, that was 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 60. So we're about, yeah, we're scalped about $80 there in literally 30 seconds, you know what I mean? So it can be done. In and out.
Of course, the message is a little cloudier in markets. Steve Dweck, CIO of Flowbank, joining us now. We are seeing NASDAQ down 2.9%, a reset of the idea of a disinflationary tilt that we thought would take hold, but didn't. Are you rethinking any?
Yeah, NAS is crazy. Look at NAS. NAS exactly the same kind of setup.
We
You can choose which one you want to trade. Are we going to get back to 236? Are we going lower? You can look left and see. And there you go. There's a level you can just put in. Draw right on it there. Look now. And if it's going lower, we're going down to here as the next level of support.
From a positioning perspective, we still have CPI tomorrow. We have the Michigan numbers coming up at the end of the week. We had inflation expectations.
Yep, there you go. And she says exactly what I said. We have.
Those have come down quite sharply as well. So I think the disinflation trend is going to continue.
Ooh, buy signal on pound dollar. Buy signal on pound dollar, team.
John, we're getting in the numbers right now. Peter Bookfire has one of the isolated incidents. Health insurance up 24%.
Nice.
Services is the distinction.
Without a doubt. Esty, with that in mind, we've got this tug of war between financial conditions and what is happening with the data.
Buy signal has disappeared. It's flashing. It's a good move though. RSI is 22. Pulling up nicely. This is a good indication now. Things are starting to move back in our direction.
Well, there wasn't going to be a pivot, and there clearly isn't going to be a pivot anytime soon. I think Jackson Hole dispelled that idea completely.
Let's just see if we can get any trades away, any cheeky buys before the open. US 30, we've got a buy signal now as well.
At some point in 2023, and how many more percentage they get in before that, that number is going up, of course, with the November expectations rising as well. But the Fed isn't going to blink. Inflation is gradually coming down, slower than anyone would like, but their resolve is going to be very firm.
Esty, where do I hide? Just as simple as that. My head is spinning. This report wasn't what I expected. Where do I hide to drag myself into 2023?
And 5 minutes to go. US 30. Let's see if we're going to go lower. So we're going to get the bounces. We're hoping for some nice bounces on the open. Nice buy signal to wait for. US 30 is getting near to where we need it to be. It's not quite there yet.
Is another place to hide, but you're making something in cash, and I think a lot of investors are going to be happy to sit in cash and wait for the picture to improve, hopefully over the next couple of
Pulling
weeks.
back again.
Esty, thank you. Esty correct there at Flowbank. Tom with the money question. Where do you hide when equities are down and yields up and treasuries are getting battered? And that's what we're seeing on 10s, on 2s. I had a message just a moment ago from a Bloomberg Terminal subscriber. There goes Goldilocks. Remember after payrolls report?
Yeah.
I sat there looking at that one specific data point. It spoke to that theme. The inflation report had just wiped the floor with that idea because this Fed has got a whole lot more work to do.
I keep thinking about what Ira Jersey said, particularly with quantitative tightening picking up.
Well, good luck everybody. We've got 4 minutes to go till the open. We've got no positions open at the moment. We're just going to see if we're going to get any kind of buys or continuations. Who knows? This is what it's all about. I was hoping for a pull up to 236 before it drops on everything. Pound dollar 236, NAS 236.
So as Ira was saying, we haven't really seen much effect of it yet. Will we start to see the ramifications of that in a withdrawal of liquidity from the financial system more sustainably early next year?
Can we get the yield curve up 2s, 10s and 30s? Because every time I check, I notice we're a little bit higher. 374 close to on a 2-year. And what are we now? 4 or 5 basis points away from the high of the year on a 10-year? After many people for the last several months, through basically the whole of summer, said the June 14th high, that was the high for the year on a 10-year. And here we are staring down the barrel of a fresh high.
Yeah, we're going to look at yield curve inversion, deep yield curve inversion, a re-inversion after a better, lesser inversion that we saw a couple weeks ago.
343, Tom.
Was this bad news? Is bad news, or was this bad news?
I think bad news is bad news. Without a doubt.
I will say, on a math basis, people tell me.
That's why I told you be careful when you see these results. You know, like I say, statistically it's good news, but actually what the event is bad news. You know, that's why you've got to see these.
I believe prices lower.
And we know, anyway, you know, if you're seeing it from a statistic point of view, US 30 goes the opposite way. It's pre-market, and it did. It was better than expected news, and it dropped. So it went exactly as we thought it would. And now we're looking for a nice little pushback. Are we going to get to that level?
Asset management I'm not sure David is. You can ask.
And we get back to 236. Good luck, everybody. Couple of minutes to go.
They're watching the Dow, but Tom, they're allocated to.
That would be
Tickmill, shaping the future of trading with exceptional trading conditions and customer support.
Let's see what we can bag. Let's see if we can get a bit of pound dollar, a bit of NAS. Everything's sat perfectly just right. US 30.
Including low-cost futures. Join Tickmill Group's growing community of over 150,000 traders. Tickmill, putting traders first.
accurate. Very good.
Okay, we agree on something. There we go. Beautiful.
Good luck, everybody.
This is Bloomberg.
That's going to be an advert now, so we'll just pull that down. Just wait. We've got 40 seconds left. Good luck. Get some green. Let's see, are we going to have further downside, or we're going back up? .28 seconds to go. Three, two, one, here we go. The market is going to react. Our fibs reset. Yes, nicely. Pushing up, pushing up. Come on, we're going to get back into our zone. RSI 20. No real big move, but he's still moving up slowly.
In terms of green funding, the Kishi administration has committed to doubling the amount of investments in so-called green technologies. I think
NAS is moving nicely.
we need real money back.
Got a buy signal on NAS.
Startups and innovative companies in this space. What do you make of Kishida's new capitalism? Well, I think his framework is reflective of the challenges that Japan society is facing.
Nice one. We've got 3 buys on NAS there. Perfect.
Evenly distributed, but frankly speaking, it's hard
That's
to
$50.
if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative
That's thanks to the signal. Just went for 10 pips there. Beautiful. That's still climbing back.
Everything you need to get set for the start of U.S. trading. Bloomberg, the
And we're back in, we're done. Yay! And we got the buy on US 30.
weekdays on Bloomberg.
Well done, everybody. Buys on US 30, just as I said. And on cable as well. We're one across all 3. Look at that. Beautiful. Wasn't greedy. And we bagged ourselves an easy $100 there in the first 1 minute of the US Open. Perfect. We actually got 27. Oh, we've got beautiful. We've got a nice, we nearly got $100 just on US 30. Pound dollar, NAS. There we go. All done. Done.
We are seconds away from the opening bell. That is your opening bell in the United States of America. Equity futures going into that cash Chelmsford, getting absolutely hammered. Down by 2.25% on the S&P, on the Nasdaq 100.
Yeah, not for us. We're buying. Thank you, sir. Now I might pull back, but beautiful.
Euro-dollar just about above parity, 100.22, negative 1% on that currency pair. Yields are flying, up by 7 basis points on a 10-year to 342.73.
US 30.
Through 370.
Tech.
Go all the way back to 2000.
Still got the buy signal. Still got the buy signal there.
Cross-asset price action with some movers at the open. Let's get to Abby. Hey, Abby.
Hey, John. Well, we do, of course, have this very risk-off day. Bearish tone for stocks at S&P 500 heading to its worst day.
Brilliant. We took some more buys on US 30. Perfect. Some more wins there. And that was another $60. Just post those. We got 20, 30, 40, 50. Yeah, another $60. That's my second batch. Now we've got to wait again. Get that coffee on. Let's have a quick look where we are again. Yeah, we're not quite there yet. Oh, it's close, but we're not there yet. No, we're still not got an official buy yet. This is just true scalping on the US 30. Cable will wait until another 25 minutes to enter a trade on cable. NAS will leave alone now. We've got our buy on the open. That's back to being negative. And so is US 30. So yeah, perfect. We've got in and out perfectly. As I say, get in, get the green, bit of manipulation, market trying to pull up. Now it's back down again. So now we just sit and wait. But in the meantime, we managed to bag ourselves a couple of $100 there on the open. So well happy with that.
Surveyed are underweight equities, and a record 62% are overweight cash, with cash levels moving up to about 6.1%. Global growth expectations also right around an all-time low, 72%.
So we're looking for, we're waiting for the buys. Oh, yeah, look at that, sell signal now. Here we go. We'll class that as a buy on the open. So we'll get rid of that, because it was.
Saying the S&P could rise to 4,300, but he then expects the index to fall back, and he remains fundamentally and patiently bearish. As for the most crowded trades, perhaps no surprise, once again, long dollar is topping the list. 56% of investors gave that answer. That is the most extended.
And US 30 is coming down. There we go. And you can see the level there. That's what we're talking about. That's the bottom of that level, which is nearly at support level. So we might see buys on that.
Inflation, fittingly today, given that hotter than expected CPI report, is number one, followed by hawkish central banks. Interestingly, a global recession moves this month from the number 2 spot to the number 4 spot, topped by geopolitical risk. And you also have a systemic credit event making the list as well.
Perfect. Got a nice sell signal. You just want to wait for this area of support to be broken before you enter into it. That's all good. And so we're looking for buys on pound dollar as the pound tries to climb back. We're not trading NAS. So, and like I say, on US 30 we're going to be waiting as well. And that was the Asian line. So now we're looking to get back to the Asian line, which is 70 pips. Amazing buys if you can hold on pound dollar. Yeah, markets have overreacted.
The CPI 32% is in shelter, and that's up 0.7%. And that's really what's driving a lot of the underlying
there are parts of inflation hanging on, but I think it's really important to recognize the economy is cooling here, and a lot of the things that pushed up inflation are cooling off also. So we shouldn't get messed up by the fact that it's a little higher than consensus here. The big story here is inflation is actually coming down.
David, that is convenient for a lot of the bulls, and yet the story that people are seeing right now is that the hope was we would see a much faster disinflation that would get the Fed not perhaps raising rates as much as they were saying. How can you lean against this? What parts of the market?
Yeah, it's selling now, so we could put some sells in if you want. Like I say, I'm off now for a break, and I'll be back later on to trade the oil tonight. I'm going to watch for cable to pull back to that Asian line. I want to take a buy on that. There's no buys on US 30 yet. Obviously, we want to wait for a buy signal now to come again, and RSI to get back to that neutral zone. So thank you, it's been successful. We did about 45 trades, positions rather, between the CPI and the open, and it was 100% today, so I'm well happy with that. Doesn't always happen like that, by no way. You know, these results take time to perfect and everything. It's just a good, steady, easy news event to trade, and a nice open as well. Catch that reversal before the markets go back to the trend, but it's overreaction to the CPI. I think they're right there, and we'll see some gains, so watch out for US 30, NAS and the pound dollar all pulling back later on today, hopefully. Let's keep watching. But until tomorrow, we'll be back tomorrow to trade the PPI news event as well, again the US Open. So until then, thanks again for joining me. Go to the website www.mohawkforex.com if you want to join our group and have us mentor you so you can learn the art of true scalping, as we say, true scalping. And until then, take care, trade safe, and we'll see you tomorrow. Take care.